What's up, everybody? Zach is back with another episode of You Know What Time It Is. Anyway, the markets bounced really nice yesterday. It is not necessarily an indication that the downtrend is reversing, although I don't really think that the downtrend is very strong in the first place. Although this week was started off pretty rough and finally had a good green day. But anyways, the S&P was up almost 1%, NASDAQ was up more than 1%, Dow Jones was up almost 1%. So we had a pretty good day. Make sure you smash that like button while you're at it, and check out the link in the Discord, link in the description for the Discord server. And if you guys have any questions, you can always DM me on Discord or Twitter if you're following me there, where we do the live trading. But nevertheless, let me share this screen real quick. Options, I'm up about 62% for the week, and 62% I mean accurate. Some have gone well, some have not gone well, but about 62%. So that's worse than what I did last week. I was 100% last week for some reason. So I'm averaging around 80 something percent. So it's pretty good. I would say it's a success, especially after this week has been super choppy. And even yesterday, I only had 3 positions that I opened. 2 of them went fine, even though Walmart was pretty flat. I do believe in this, and we still have a while left on this contract, so I'm going to let it ride a little bit more. But the Tiger, I did take the profit on that one. AMGN, it's down a little bit. It's only down 18. I think I'm down 18% on it, so it's not bad. I'm going to wait for a bounce tomorrow, and if it doesn't bounce, then I'm just going to cut that one and chalk it up to another loss. Which is what you got to do. You got to know when to cut your losses. You got to know when to take your profits. You know what I mean? And also, like we covered yesterday, well, we touched on more of that yesterday, and also the position sizing. The position sizing is it's pretty important. Cannot talk today. But anyways, like I said, it was a pretty good day. I was up 3.3%. Nothing crazy. Mostly the markets jumped up a little bit. Nothing significant, although my Soxel rallied super hard, finished up 8%, more than 8% actually. So that it's always makes me happy, because my Soxel is my beloved Soxel. I love the Sox. I love the Soxel, all of the semiconductors. And I did see some thread that was started on my Reddit, which is the Reddit, it's like r/ProStock. It was about a lot of semiconductor companies are going to report earnings soon, so Soxel could rally super hard. And while that is true, there is a big shortage of semiconductors. So you would think that, you would just initially think that, but actually, since there's a shortage, they might not be making as much money because they don't have any of the parts to make them. But you know, it can go either way depending on the company, obviously. But it could definitely go either way on that. So just keep that in mind when we're coming up to this earnings season. Don't you just love it? I personally don't. I would just love everything just to be smooth sailing every day, all day. You know what I mean? But yeah, I'm not in any rush to jump into more short-term options. But if I see an interesting scenario or situation or setup, then of course I'm going to take it. But my style of trading, and probably most of you guys know this because you've been following me from the beginning, obviously. But if you guys are new here, I will let you know, if you haven't seen and figured it out already, my style of trading is I'm focused more on the long-term games. Long-term buy and holds are my love and my passion, ETFs and stuff like that. And secondary is swing trading over some months, like my GEVO. GEVO, I started buying it, it kept going down, I bought some more, kept going down, bought some more, kept going down. It's all good. I'm not sweating, because I know this is a swing trade for myself that's going to last months to come before we see a double or a triple of GEVO. But anyways, and so I'm not really focused on the short-term options, although I do some if the market conditions are right. Now you think back on the February and March dip towards the March lows. I cut all my options, all my short-term options, and went into iceberg mode, Titanic mode, and started dollar cost averaging down on my long-term positions from the capital that I raised from cutting literally all of my option positions, the short terms at least. So yeah, I'm mostly focused on this, and so different periods and different market conditions and situations I would treat it differently. Not every day is going to be the same. Not every day I'm gonna have 10 entries and 10 exits of short-term options. It just doesn't work like that. I'm not trying to force anything. I'm trying to be more natural, and what I would usually do, I'm going to do. I'm not forcing it just to churn out the content. That's not really who I am. I don't really care about that, to be honest with you. But hopefully you guys can follow along on my journey and smash the like button, and you can maybe learn some things. You can see what I'm doing. Maybe you want to do it, and maybe you think it's horrible, which there's some of both for sure. But nevertheless, that's just like a short way to say that's my risk management. I'm not going to do the short-term options when Monday and Tuesday. I did do some that I've had conviction for, some winners, some losers, and just overall a little bit less. But that's my risk management. And I would recommend, if you had, let's just say if you have $10,000 and you're doing all $10,000 on short-term options, weeklies or monthlies, that's probably not a good idea, and that's not going to be sustainable long term. If you have your 10,000, I would probably put at least half in long-term buy and hold or swing trading, 60-70%, at least 50%. I would personally do that. And then the rest, 20 to 40% or whatever, maybe put in this, take your chance with this short-term options, because your long-term buy and holds and your swing trading, where you do all your juicy fundamental analysis and due diligence, that's what's going to hold up your portfolio, so you can afford the luxury of taking more risk of doing the short-term options. Because anybody that's only trading short-term options, it's I guess you could say you have some pretty big balls. I don't know, but that's the riskiest thing that you could possibly do. So just leave it at that. And while we're on that, touching on this note, if there's any other way that I can be even more transparent, which I try to be as transparent as possible. So if there's another way that I can be more transparent, please send me a suggestion, recommendation, email, DM, Twitter, Discord, doesn't matter. Let me know how I can make it easier for you guys to digest this information that I'm just putting out every single day. Sometimes I might focus a little bit too much on the trades and not on the best way to present it, which I think that's just my style. But hopefully you guys are enjoying it, and send me a recommendation. I would love to see. But nevertheless, guys, with all that said, keep in mind, it's your responsibility to take the profits. It's your responsibility to cut the losses. Those are very important. If you don't know when to take a profit on a short-term option or a swing trade, it's eventually going to go back down, let's just say, and then you're going to regret should have been taking profits consistently on the way up. And same with the cutting the losses. Don't let the short terms decay until zero and then not get in the money and then expire. I mean, those are really important. You need to know when to cut your losses and take your profits, and the position sizing and whatnot. So think about that, your own risk tolerance, your own money, and take the responsibility. If I didn't take profits yet or cut the losses yet, but according to your strategy and your risk management, you do it before I'm doing it, you do it after I'm doing it. It totally doesn't matter. It's always going to be up to you. And if you don't like some of my trades, don't do them, please. So really just keep those things in mind, and be consistent about taking the profits. I would say that's the number one advice I would give to new traders. It's taking profits at the right time. I see a lot of people struggling with that. Anyways, let's move on to the short-term options that I'm considering. I'm looking at this Apple May 7th call, $135 call at $2.90. Let me make sure I'm sharing the screen. Yep. $2.90. And so Apple was down in the after hours. Let's check this out. Apple is actually down 0.45% in the after hours. So I am waiting to see if this is going to bounce. But as you see, it is running right up against this 50-day moving average on the 4-hour chart. So that would be a more short-term support. So I'm definitely looking at that. And what did I say? I said 5,735 call. Let me double check that. 135, yep. And I'm thinking, since it's down so much in the after hours, this is obviously not going to be accurate, because it closed up almost 1/3%. And then it's down almost 0.5%. So this is going to be a lot different. So obviously we need to see what price this contract is opening for, but we got some time on it, and I think we can get it less than $3. That's for sure. Depending on what's it opening for. And yeah, I think that there's not so much risk in this one. It's not very expensive. And I'm bullish long term on Apple. I think it's going to get to $180 within this year. I think it's possible, although we might go into a 12 months until it gets to $180. But anyways, that's my target. So overall, I think that this could be a pretty good option with low risk. And then anyways, next moving on to Beyond Meat. Looking at the $430 $134 call. Beyond Meat. $430 $134 call. Actually, it's very similar in price to Apple. And this one closed at $420. And I'm thinking that we could try to pick this up at $250 actually. And this is in the middle of completing a double arch, so I'll show you what I mean on the technical analysis, that is. And also this one is down 1% in after hours, so this should get a lot cheaper. We'll see exactly how much we could pick this up for, but nevertheless, go on the day chart here, and it is finding the support right around the $125 level for a while actually. And it's coming up, going down, coming up, going down. So that's my arch, my golden M arch. I sealed that a lot actually, especially as of late. That's just kind of how this market is playing out. But nevertheless, if this does get back down there to the 125, that's a big buy indicator, I think. But even with just it being a little bit of a discount now from the after hours, I think it's reason enough. I think it's reason enough to buy this one. And going back to the day chart here. So we'll see. We'll see if this is going to bounce, or we'll see if this is going to pull back. But that is definitely what I'm going to be waiting for and make a decision on the Beyond Meat one. Hopefully we can see it get past 134, 135. 8 days, I think it should be enough. And then the last one is TDC. This one was actually up 32% in the after hours. Teradata. 32% in the after hours. Check this chart out. So yeah, usually when that happens, it pulls back, and as you can see, it's already started to pull back a little bit. And so I'm wondering if it's going to further pull back to the $50 level, which I think it's very possible. Usually in the stock market, everything is an overreaction or an underreaction, I guess you could say. But this was up almost 33% in the after hours. Yes, it had amazing earnings. I just don't know if it's justified to go up 33%. Is quite a lot. So we'll see about it. But before, I mean, it's possible because was in middle of February it was up around 50, 60. So we'll see. We'll see. But let's see, 53 it's trading for now. So it's also really high. It's almost back to those levels. So I think it might. And as you can see, it bounced up here and then it pulled back. So I'm looking for another bounce up here and then pulling it back. Let's go out to the 4 hour one more time. So up and then down, leveling out, and then up, and then I think it would maybe pull back 10%, I would say. Maybe $5. Could be $45, $50 range, and before it starts leveling out. Usually what I find is a lot of things are overreactions, and they all average out eventually. But anyways, that one be really small in the sizing on that one. That one is just risky because it's coming off of, and that's a put, by the way. I don't know if I let you know. I don't even know if I said that. I don't think so. But the put, the $50 put, I think it's going to pull back. So put. But see, that's the risky part, is after a super good earnings report, it's up 32, 33%. So that's pretty much what I'm going off of. So that one I would keep really small. I don't think that one would be all that expensive since it's up 33%. But we'll see what it opens at. I mean, it can keep blasting off. So a little bit careful on that. Give it 5-10 minutes. Let the markets digest. And then see if we want to get into a put on that one. Of course, chill on that a little bit. But other than that, we can look at triple Q and SPY puts and calls, just for some short-term scalping because this market is so choppy. I don't really know. I cannot really say what the markets are going to open, if it's going to be a green day or a red day. Obviously, who knows? But the futures are pretty flat. I mean, S&P, it's negative 0.06%, so everything is very flat. They're starting to trend upwards, so who knows? It was about the same as yesterday, and we ended up with a green day. So who knows? We could see a green day, we could see a red day, who knows? But QQQ, SPY, puts, calls, we'll see about that. Those were three pretty good options. I mean, one is up 33%, so come on, I wouldn't be surprised if it fell a little bit. But anyways, guys, remember to follow me on Twitter, YouTube, and the Webull link in the description. They're giving away, you have a chance to win like 60 free stocks, which it's just depends on how, if you're a first time user of Webull, you sign up, make an account, and depends on how much you want to deposit in the Webull. They give you a bunch of stocks, literally up to 60 if I believe. Somebody correct me if I'm wrong on that. But nevertheless, guys, Twitter, I will be trading. We will be doing the live trading on the Twitter at opening bell. So go ahead and follow me on Twitter. Turn on the bell notifications if you want to trade along with me. But anyways, guys, I'll see you on the other side. Peace.